investing patiently. This is one of Warren Buffett's one of his biggest things. He talks about all the time. You read any book, watch any video on Warren Buffett, any quote, all the cliches you see from Warren, his shareholder letters. What is the common thing, the thread that winds everything together? This, investing patiently. This is the biggest thing. He says it all the time. And what does he say in Buffettology when you're reading one of his books? He talks about finding the area. So we're finding an area you love or a stock you love, a company you love. Find the right investment. Right? This is one of the biggest things. Find the right investment and then wait patiently until it goes on sale. This is the biggest thing he does. He just sits in the weeds. What does he say all the time? He says, think like you can only make 20 trades in your life. I forgot make. If you can only do 20 trades in your life, what would you do? You'd study your butt off to see every single thing you could see about your company, that company. Then you'd invest finally, once you can do that, and then you sit in there forever and use the power of compounding to your advantage. And then one of the things that I'm going to throw in here is just what I have seen throughout the last 10, 12 years of investing myself and then studying other investors, which is kind of one of my own theories or rules, which is I would venture to guess if you have a 40-year investing career, which, some of you have less, maybe you're older, maybe, something happens, you're just not investing anymore, whatever it might be, right? But if you have a 40-year career, say it's kind of like the lifespan of you working or something like that, or an average person working, 40-year investing career, I would venture to guess that 90% of your gains come within a 5 to 7 year period. And Charles Schwartzman, I believe I'm saying his name right. I think it's Charles Schwartzman. I can't remember what he was now at BlackRock, one of the biggest hedge funds in the world. And someone here can correct me for who it is. But I've read his book years ago, and I was just talking to one of my good buddies, Mike Menino, about this. He was a big real estate investor here in Michigan, in Metro Detroit. He's all over the country now. But we were just talking, he was reading the book as well, and we were talking about patience and how, when you're investing, it's not linear. It's doing this the whole time. It just looks like a price chart of anything. And it's not some big thing where you might hit it really big in 2009, 10, 11, 12, and you're investing a ton in cash flowing stocks, corporate dividend aristocrats, real estate, whatever it might be. And then you might be patient for a few years. Maybe it looks like this, and then it kind of goes for a while, and then it goes like this, and then it goes for a while. That's what happens. So your 40-year career, probably, I would say 5 to 7 years give you 90% of your wealth in your 90% of that coin. So this is patience, investing patiently. The biggest thing most people are doing is they are jumping in and out of trades, and you're getting creamed because you're trying to time the market, and it's impossible to do unless you're an algorithm. You're getting hit with taxes all the time. So what are we doing? We're waiting for the right investment to come along, get on sale, buy low, then sell high. We're selling covered calls against them. We are getting dividends. We're getting cash flow. We're finding apartment complexes that are cheap, and then we're cash flowing those and riding that appreciation up and then refinancing out for infinite returns. This is what this is all about. It's the same thing every single time. And most of that, you're going to be waiting 5 to 7 years or 40 years. So 35 years, just be waiting around, enjoying the dividends, enjoying the cash flow, not actually making moves. And just like at the end of the day, most accidents that happen because people are changing lanes. And it's because they're trying to shift. The grass is greener in that lane. The grass is greener there. I'm going to do this. This thing's running up. This thing's going to the moon. They're jumping in and out, getting hit with capital gains, and they're switching lanes. They're getting into accidents, and their long-term wealth is destroyed because of that high time preference, that want, that need to just do that next great thing, the perceivably next great thing. Be patient. Be patient, and make sure we are planning and gearing for the long term and having low time preference and investing for tomorrow instead of trying to reap those rewards today. Because believe me, Warren Buffett, for 70 years of investing, he's accumulated $100 billion of wealth because he's let those investments, those 20 investments, just compound over time, and has been smart and not got hit with many capital gains at the end of the day when he's selling, because he's just reaping the rewards of the calls he's selling against those stocks and the dividends. So If you have any comments, like I said, the guy's name at the hedge fund, like I said, that book is an incredible book. If someone knows the name, please correct me. And it's patience, waiting patiently. And remember, please, everything for freedom and fighting against those that are in power and out of control governments. That's the biggest thing. So how can we do that? Well, we can gain freedom by this today, investing patiently.